Welcome to my weekly market roundup, 1st May 2021. I am Sagar Nandi, retired IT professional, swing trading stocks using the Q systems and techniques. That technique aligns the forces from market level, sector level, industry level, fundamental, as well as seasonality level, aligns forces from all these levels with the trades, giving truly high probability trades. You may contact me using my email ID tradingprofitably@gmail.com. I regularly share live market and stock analysis on my website sagarnandi.com, YouTube channel Trading Profitably, and Twitter handle Sagarnandi. You are most welcome to make use of them. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. I use the Q systems for trading that run on the TradeStation and Metastock Zenith platforms. That was the last slide of presentation. Let's continue with the live system now. This is E-mini S&P 500 futures. I usually start with the global markets. I will go to the global markets momentarily. E-mini S&P futures had displayed a bearish headwind signal couple of days ago, and then it displayed another bearish headwind signal on Friday. In the weekly chart, it is showing the indecision at the top signal, and there is a bear release signal as well. There are some weaknesses in E-mini S&P 500 futures, but it is very much in an uptrend. Now, I looked at these weakness signals in daily, weekly, to see if there are similar signals in global markets. Let's start with the global markets analysis. Starting with Australian market, the index AXJO. When price came to the upper boundary, I was not going to buy the instrument Australian index. Now it is near a trend line support in daily. It fell by a large amount on Friday, however came very close to the trend line support. I am not going to short it because it is near the trend line support and there is no long trade setup. It is remaining close to the upper boundary level in an uptrend, but there is no long or short trade setup. Japanese market index topics continuing to move inside a triangle formed by resistance trend line and support trend line. In the weekly, after displaying the bearish headwind, price has dropped. It has not been able to go up. This week's candle shape is bearish, color is bearish. Though weekly is looking bearish because of the trend line support in daily, we are not going to short right now. Chinese market CSI 300 index. Sorry, my sound was mute. Let's look at the Chinese market index, CSI 300. The support trend line in weekly is working very well. The support trend line in daily is also working very well. Now it is inside extremely narrow range formed by the immediate support and resistance trend lines. You may wait for price to break out to see whether to take long trades or short trades. FTSE index. It is still at the trend line support in daily that I identified somewhere here. However, on Thursday and Friday, the candle shapes are bearish. The weekly candle shape is mixed, color is mixed. It is near the upper boundary level. We may avoid taking any long trade now near upper boundary, and we have bearish shape candles on Thursday, Friday. However, we are not going to take any short trade also because there is a trend line support nearby. And there is no Q trade setup in the short direction if you apply the unambiguous checklist. Lastly, India's Nifty 50 index. It is also inside a range formed by resistance and support trend lines in the daily chart. In weekly, the shape is mixed, hollow body but long upper tail, that is a mixed shape candle. Color is bullish, there is a trend line support. It is inside a range in the daily and right in the middle of the range, that is a no trading zone for Q systems. Either we look for shorting opportunity, reversal trade at the upper edge of the range, or reversal long trade at the lower edge of the range. In the middle, we are not going to take any trade. It is continuing to be range bound. We see that none of the global markets are bullish for short-term trading. What about USA market? We looked at ES, that is S&P 500 futures. Let's look at SPY. ES displayed a number of bearish headwinds, and SPY has the same bearish headwinds in daily for 2 times in a row in the same week. And there are number of indecision at the top signals both in daily and weekly. Price is moving in extremely narrow range on a closing basis for several weeks, and for last couple of days it has doji candles. 1 day, 2 day, 3 day, 4 day, 5 days. That means all the 5 days in this week ended with a doji candle in spite of Fed rate decision on Wednesday, in spite of several mega cap tech stocks announcing earnings. The market is still waiting for something, still indecisive, and the indecision is very clearly shown by the 5 doji candles in a row. Not usual. If you look back, you will not see 5 doji candles in a row in the daily chart anywhere on whatever is being displayed on the screen. That is showing very much indecision, and prices at the upper boundary. It had a bear release signal also on Friday when it has so much indecision at a high price point because it is near upper boundary and also because it is at pendulum high, not only in daily but also in the weekly chart. That is not a point to take new long trades. One may be very careful. Let's look at QQQ. QQQ is also moving in extremely narrow range, surprising considering a large number of tech stocks, mega cap tech stocks also announced earnings this week. Several indecision indicators in the weekly, while at pendulum high, bear release in weekly, certainly bullish, moving in extremely narrow range and overbought. With indecision, one may be cautious and not take too many long trades. Next is Dow Jones Industrial Average ETF, DIA, displayed a bearish headwind here in daily, moving in a narrow range. In the last webinar, I showed that it was inside a very narrow triangle, somewhat like this. And I mentioned that because the triangle was so narrow, if it closed below the support, one could take a very low risk short trade. In fact, I did take a short trade in DIA using long put verticals right on this day when it broke below the narrow range triangle that I talked about in the last YouTube live session. Next day price went up. It even created a reversal candle. However, stop was not hit. Stop would be just above the trend line resistance. That would be very narrow stop. I was ready with the stop level, but it didn't hit the stop. And on Friday, it closed lower. I think I have a small profit in the long put vertical trade. If it goes down from here, I am reasonably confident I will be able to book profit at 50% of max profit. And if it goes above the trend line resistance, I will exit with a very small loss. I took the trade because the stop loss was very narrow and there were multiple indecisions in market ETFs futures at the top, and you can see here this week's candle has turned bearish. Previous week's candle was indecisive. We'll see how the trade plays out. If I have to take a loss, I will take a loss. Because it is a vertical trade, neither my profit nor my loss will go up very fast. Verticals profit, the full profit is realized only near expiry. I have a number of weeks before expiry, so whether it goes up or goes down, I will not maximize my profit or loss immediately. So I am okay to take a small loss if it goes up above the trend line resistance. I wanted to explain how I use the narrow triangle to take an extremely low risk trade, short trade in DIA while market is at the top. And IWM, in this area it was doing better than the other market ETFs. On this day, Thursday, it opened with a gap up and then fell down. Friday it fell down again. For the last 2 days it is underperforming the market. And this is probably the most bearish looking market ETF at the right edge. The weekly shape and color both are bearish. Friday's candle shape and color is bearish. There was a bear release signal on Thursday and an indecisive candle, bearish candle at the top on Friday. So I have opened a bearish trade on IWM as well. This is looking like the weakest of the market ETFs. I have a long put vertical. Again, if it goes up, I will book small loss and exit the trade. If it comes down, I'll try to book profit at 50% of max profit. Though I took two bearish trades in market ETFs, not that the market is coming down. I just took the trades because market is looking indecisive, extremely indecisive at a very high price level. That let me have attractive reward risk ratio. I'll see how the trade plays out. All the market ETFs are moving sideways. Some are moving in extremely narrow ranges. Indecisive days and weeks, not the time to take many trades, at least not on the long direction, not on the short direction also. If I try to find bearish trades, not that I'm going to find many Q360 degrees short trades. We may try to find some, but I think it will be not so easy because the market is not coming down. Now let's have a look at the market internals. When I'm using Q Global, let me go through that also before switching to Q Edge for sector industry rotation. First, starting with Mega Cap Top 20, the custom index in Q Global Market Breadth, displayed two indecision at the top signals on Wednesday and Thursday and a bear release signal on Friday. Certainly going up in an uptrend, and it has a trend line support, so I'm not going to short this. If you compare this chart with IWM chart, you will see very obviously that IWM is weaker for many reasons. Firstly, IWM was not in an uptrend. Secondly, IWM's backdrop color was bearish in weekly. Shape was bearish in weekly, not for mega cap top 20, and the same is true for daily. So I shorted the weaker symbols. Mega cap top 20 is bullish. It is at a very high price level showing indecision, but it is bullish, not even moving sideways. Let's look at the composite indices weekly. In the last webinar, I showed that for Nasdaq, the percentage of stocks above 50 MA, that is coming down. It was below 50% level in the last webinar, last Wednesday's webinar, and it is remaining there. The other MA calculations, percentage of stocks 50 MA above 200 MA is very bullish, not coming down. Percentage of stocks above 200 MA for Nasdaq also coming down, but very slowly above the 50% level. Whereas for NYSE, it is even stronger. All the three studies are much above 50% level. In fact, they are close to the 80% level. If you look at the percentage of stocks that are making new highs and new lows, you may say there is a bearish divergence here. Percentage of stocks making new high in Nasdaq came down, whereas the Nasdaq composite slightly went up. That bearish divergence is not visible in NYSE. It continued to make higher new high low percentage of stocks making new highs, while price went up as well. So we can see the weakness in Nasdaq from two angles. One is the percentage of stocks above 50 MA is much lower, and we have a bearish divergence in percentage of stocks making new highs. The advanced decline and up-down volume are not showing any bearish divergence. They are continuing to go up. I have added one study that Dr. Jeffrey regularly refers to, that is the T2121. I think that name is from TC 2000. It's a 3-month new high low indicator. It calculates the number of stocks as a percentage making 3-month new highs. How to read it? I watched Dr. Jeffrey's video, and I also sent an email before sharing the information with Q traders. I did some research on the internet also, how to interpret this line, zigzag line, not the candle chart, but the line that is the 3-month new high low. Firstly, a high value of this indicator is bullish. So what is high value? The midline is 50%. So we may say anything above 50% is more bullish. Anything below 50% is bearish. And then Dr. Jeffrey also uses it as an overbought oversold indicator. Not in the sense like RSI or stochastic, etc. Not even in the sense of Q stretch and stretch release, because this is a market breadth indicator, and market breadth or internal indicators tend to be much more powerful because they show not what is happening on one stock but on the market as a whole. Here for Nasdaq as a whole, for reading extreme conditions, you may note the places where it is going above this threshold level on the upside and below this threshold level to the downside. Depending on whether we are looking at a composite or a major index like S&P 500, Nasdaq 100, Dow Jones, these thresholds may vary. But we don't remember the numbers. We don't look at numbers in Q systems. We never have to look at numbers or set parameters compared with thresholds. These are visual systems. So whenever you see that it is in the upper extreme between the two upper threshold lines, then it is at a very extreme level. And how Dr. Jeffrey uses it is based on his studies that it doesn't stay there very long. And unlike single stock overbought oversold indicators, it does not stay up there very long. Traditional single stock overbought oversold indicators like stochastic, even stretch signal in Q systems, they may remain overbought for a long time, but 3-month new high new low, I understood that from Dr. Jeffrey. I have not actually used it for a long time, so I am sharing the insight I received from him and from internet that it doesn't stay there for very long. So that means if it is going to the extreme level, you may be careful and not take too many long trades. If you did that, you wouldn't take long trades in Nasdaq or be careful from this point onward. And after that, we saw the weakness in Nasdaq from other market breadth studies. This study has also come down. It is below the extreme level now. Whereas NYSE is actually at the extreme, just came down below the extreme level on Friday. It was at the extreme level on Thursday. Earlier it was at the extreme level here and here. So whenever it goes to an extreme level, you may wait for it to pull back. And once it pulls down and starts to go up, you may look for buying opportunities from those points. These are the different ways to use that 3-month new high low indicator. Again, let me summarize. Study coming above 50% level is bullish, below 50% level is bearish. Extreme high is when the study is between the upper threshold levels, these two upper lines, dotted lines, and lower extreme is when it is between the two lower threshold levels. One way to use the indicator is to let it make a low point and start to go up and look for buy setups there, or wait for it to go to the top and start to come down and look for short setups there. So we are able to use it as a reversal indicator or a trend continuation indicator, depending on whether we are catching the top bottom of the study or we are catching a cross of the 50 level or making a low point, not touching the lower threshold, but making a low point, low swing low, and coming up from there. I'll continue to use it. I just included it in the market breadth studies. Now if we look at Nasdaq, this study is also showing weakness relative to NYSE. Now let's look at the major indices. Not much has changed since the last webinar. I'll go through it quickly. The MA calculations for the major indices are pretty bullish. All of them are near the 80% level. So they are not showing the weakness that is shown by Nasdaq. Percentage of stocks making new highs. You may say Nasdaq is showing bearish divergence. S&P 1500 is also showing bearish divergence because percentage of stock making new high coming down for Nasdaq and S&P 1500. This is S&P 1500, this is Nasdaq. Whereas the studies themselves, the indices themselves went up. So we have bearish divergences here. Nasdaq 100 new high low percentage and stocks making new high percentage of that, and in Nasdaq 100, S&P 1500, whereas S&P 500 and Dow Jones is not showing any bearish divergence. Advanced decline going up, up down volume is also going up for all of them. If we look at the newly added 3-month new high low added here also, they are at extreme level for most of them. They were at extreme level for all of them in the beginning of the week. In the last 1 or 2 days for Nasdaq 100, it came below the extreme level. For S&P 1500, it came below the extreme high level. But for S&P 500, it is remaining at extreme high. Dow Jones Industrials, it is remaining at extreme high. So what did I say earlier? When it is at extreme high, you may look for reversal trades, or you could just avoid taking long trades. If you are willing to take short trades, you could start to look for bearish trades also. This is in sync with my thought of taking a bearish trade in Dia, because it is at an extreme level when you look at 3-month new high low also. And I took a bearish trade in IWM. IWM is not among these 4 major indices. However, the closest one would be the most broad index, which is S&P 1500. S&P 1500 was also at an extreme high level for new high low. So it was a higher probability trade in that sense also to try to take a bearish trade. And I reduced risk further by taking verticals. None of these internals are showing any or enough weakness other than Nasdaq. Nasdaq relatively is showing some weakness. There is no other weakness from any other market breadth study. And if we see the market breadth total view, I'll just point out to the accumulation distribution counts. The other studies I have covered in individual index studies. No significant market drop has happened without a distribution count of 2 or more. And this distribution accumulation counts are calculated by combining the data from 2 composites and 4 major indices. Couple of days ago we had accumulation counts of 2 and 1. There is no distribution count at all. And I have added 3-month new high low here also. You can see for the total view as a whole, the weekly was at an extreme. Just recently it tilted down. Daily also hit the extreme. Just on Friday probably it tilted down. Remember, whenever it reaches the extreme level, a pullback is likely. So we may be extra careful. There is no distribution count, there is no reversal trade setup, but it is extremely overbought and a pullback is likely. No weakness so far, overbought, extreme level for market breadth studies, but no reversal signals. Now if we look at Q edge for bucket analysis and also for sector industry rotation, firstly, Friday was weak under the hood. This weakness was not visible from the market ETFs or market futures, but Friday was weak. 91% of sectors, 86% of industries, 78% of stocks went down. Certainly weak market. That resulted in the percentage of stocks in the extreme bucket to go down from 11% to 6%. From 11% to 6%, and the percentage of stocks above mid bucket came down from 73% to 60%, which is still bullish. But it is a significant drop as well. 7% drop in the stocks above mid bucket and 6% drop in the stocks in the extreme high bucket, or 5%, sorry, 6 and 11, so 5% drop here. Those are significant drops, and Friday was bearish. We can clearly see that. Let's look at the transition. One month to 1 day, sector advanced decline, industry advanced decline, stock advanced decline. 1 month period is remaining bullish. 10-day period mixed. 5-day period mixed. 2-day and 1 day, that is Thursday, Friday together, and Friday they are bearish. This has happened earlier also. Last 1 or 2 days had turned bearish and then they turned bullish again, making the 5-day, 10-day also bullish. 1 month has remained bullish for a very long time. We'll see next week if the same bullish reversal comes or the weakness of Friday continues. There is no signal anywhere so far what is more likely to happen. Not from the studies we are seeing so far. If we step back and let's look at the sector performance over 5-day, 10-day and 1 month period. 5 days mixed, 10 days mixed, 1 month bullish. Infotech is down over 5 days as well as 10 days. Again, this is in sync with what we saw earlier. Nasdaq is relatively weaker. Interestingly, utilities is also down over 5 and 10 days. Consumer staples is also down. These are very defensive sectors. They are also down over 5 and 10 days. Infotech, very non-defensive, is also down, and healthcare, non-defensive, is also down over 5-10 days. Both defensive, non-defensives are down, so we cannot gather any insight from there. I see real estate is up over all the 3 periods. That is probably because of the vaccine rollout. People are going out more, and maybe that is giving a boost to the real estate sector stocks. We may look for some buying opportunities there. If you see the sectors that are up for all the 3 periods, 5 days, 10 days, 1 month, real estate is the strongest. Next is financials. then industrials, but industrials this week is up by very small percentage, almost zero, so let's leave that. And to some extent consumer discretionary, again this week consumer discretionary is up by a very small percentage, so let's leave that also. Practically speaking, two sectors are up over all these three periods. Real estate is the best one, and next is financials. We may look for buying opportunities in them. Financials were going up for a while. In fact, if you looked at regional banks, they might have weekend on Friday. Friday was a weekday across the board. We may study that from sector industry rotation. Interestingly, I saw some people, some traders were looking to buy materials stocks, and I looked at QH sector industry rotation, looked at material sector and drilled down to the industries, and I showed that steel, aluminum, copper, the industries that were very strong couple of weeks ago, couple of months ago, they are weakening now, decelerating. Materials as a sector was also decelerating, and I suggested that to be cautious, not to buy into decelerating industry. The best buying opportunities were there earlier. I shared a large number of snapshots in one of the chat groups to explain that. That may be true about financials. We'll look at that later. If I remember, I'll come back to financials and materials and explain how the sector industry rotation could help us avoid buying at the top. Again, coming back then, 5-day, 10-day mixed picture. We cannot say it is bearish, mixed picture. So we don't have any clue from here where the market will go next. We have one last study to see if there is some signal there, that is Q Finder. Let's look at that. Q Finder shows the balance between bulls and bears. First I am looking at the weekly chart. All signals has now turned bearish. Not by a very large percentage, but it is still bearish. Strength signals bullish. That is because of a large number of gap ups. Trend continuation bearish and reversals bearish. As I mentioned earlier, strength signals bullish 72% because of gap ups, followed by large reversals. Overall, that pattern is bearish. And what I mentioned in the last webinar also, we continue to have a non-negligible number of bearish headwinds in the weekly chart. That is a concern. I tweeted about these things also. Those are telling if at all we have some weakness showing up, that is coming up from the actual trade signals, from technical trade signals. It was not there at the sector level, not there at the market ETF futures levels, not there at mega cap top 20, not there at market breadth studies. If at all we have to look for some weakness, we find that in Q Finder weekly chart. What about the daily? Daily Friday's pattern is of course very bearish across the board, whether it is all signals or strength, trend following, trend everything is bearish. So Friday was certainly bearish. See the difference between the total number of bearish and bullish signals. It was bearish across the board. So Friday was certainly not a day to take new long trades. So we found some bearishness from the finder. In fact, significant bearishness. If you compare finder with the other studies, we find significant bearishness, and that is very useful for traders because finally we trade and make profit buying a stock only if the stock goes up. And we use unambiguous trade setups, unambiguous trade signals and setups, and those are what are used to create this technical breadth studies, and that is showing us it is not a time to take long trades. There are plenty of short setups here, but we'll have to see when we apply the 360 degrees approach, that is try to find not only technical setups that are in weak fundamental stocks in weak industries, and sometimes we may look for weak seasonality. We may or may not use seasonality all the time because seasonality is not as important as technicals. If technically we have a short signal, we may align certainly the industry and also the fundamental. We'll see if we find some such short setups. If we find, those will be lucrative because market is at the very top level, potentially lucrative. Overall, market is certainly overbought. We see that from many angles, and the Q finder studies are showing bearishness as well. Now I mentioned about bearish headwind appearing in several market futures, market ETFs this week or last week. For a couple of weeks, market is moving sideways. Bearish headwind came at that time. Let me show one chart probably where the bearish headwind had appeared at the top or bottom. I don't remember. I noted some symbols here to study. We can look at them together to see how the different Q signals are playing out. Let's look at Home Depot. Home Depot is going up sharply. Let's look at Home Depot. Is it Home Depot? Let's look at Home Depot from Q Global. Yes. Home Depot in Q Global displayed a bullish headwind signal right at the very bottom. If you kept an eye on that, you could start to look for buying the stock right from that time. Or you might wait probably for price to go up above this watermark support, which created a false upside breakout. So you could take an early entry. That would be useful because after that, Home Depot never pulled back. So it didn't allow us to take an entry if we missed the first entry. This is how the bearish and bullish headwinds come to our help. Sometimes they allow us to catch the very top or very bottom, and of course we'll align the fundamentals and industry strength at the time of buying. Let me close that. Now let's look at two stocks that I discussed earlier. Dia, I mentioned I took a short trade when price came down below the trend line support, and I am changing the template here to see the historical trend lines. There was a very narrow range. This was the trend line support. When it broke below that using real-time chart, right here, right at that point it was breaking below trend line support, I took a short trade. So I'm holding on to the short trade. Stop loss is just above the trend line resistance. This is one trade I discussed in the last video. AVGO. This was a trade I shared earlier, probably on this day. I was aware of it having resistance and of course support in daily, weekly both. At that time, AVGO's industry, semiconductors, was going up. So I was in the trade. The stop loss is just below the trend line support. It has not hit the trend line support yet. It's moving in more narrow range triangle now. We'll have to see if it breaks up or breaks down. If it breaks down, the trade will exit with a small loss. Let's look at Netflix. Remember how for CSI 300, the weekly daily trend lines helped us anticipate that price will stabilize and might go up. That happened, and see Netflix. After earnings, it had a huge drop, huge, massive drop. And it stopped right at the trend line support. When price dropped sharply and stopped at the trend line support, there is a very high probability trade there, that is to use short put vertical. Those are very low risk trades because of the trend line support, and the volatility would be in our favor. By now, those short put verticals would be in a nice profit. Short put verticals would make profit in this case even if price moves sideways. In this case, it moves slightly upward. The volatility will crash, and that will give significant profit in the trade. That is how we may use bounce setup. When a stock drops suddenly and sharply, stops right at the trendline support, especially on the days when implied volatility is very high, using short put vertical is very useful. Of course, we will also check, at least I will check, the fundamental strength overall is not too weak. Netflix is a robust stock. Looking at it at the trendline support, you could trade it with very low risk with short put vertical. I noted down these symbols to show how different signals like headwind and trend lines can be used. One last DEO, I think Diageo. It's a drinks company, I think alcoholic beverages company. It is at a very high price level, and I noted it because it broke below trendline support with a very bearish shape candle with bearish pressure and a bear release. The weekly displayed an indecision at the top signal, bearish shape candle, neutral color. I would be happy to short it if I had some kind of resistance in the weekly also. In the weekly, it is not showing that. If I change it to monthly, you can now see that there is a watermark resistance. Price did go above that, and it is not unlikely that price will come down at least to retest the resistance, which would be support if price continues to go up, and which would be a false upside breakout if price breaks below that. So it is possible under such circumstances to look for a short trade. Now I looked at the stock. I think I found it from Finder. Let's do a Q360 degrees analysis on the stock. That is the fundamental analysis, technical analysis. For technical we have seen already, fundamental, industry, and we may look at seasonality also. Again, seasonality is not mandatory, but no harm looking at that. We have all the tools now. By the way, I tweeted today that an updated version of Q seasonality tool is now available. Those of you who are using Edge Vital Index seasonality, they may download it from Dropbox folder. All you have to do is download the file and place the Q season program in your working folder. Don't need to do any other installation steps. And this is for traders who are using Edge Vital Index. It is available to them complimentary. And I'm using the updated seasonality. It's still a beta release. I have to do more testing before I can declare it as a general release. Let's look at the stock. Start with fundamentals. Okay, let me play it. Distillers and vintners. Let me look up its industry from Q Edge. On Friday, the relative score, whether you look at the primary industry or the secondary industry, alternate industry, the relative score decline. It's now either 12 or 32. If you use the industry score, then out of 147, it is a score of 32, that is weak, and it is not going up. Overall, it came down between 5 days to 1 day period, weakening. And if you look at the percentage changes, here we see the relative score and here we see the actual performance of the industry, be it 5 day or 2 day or 1 day. Friday is all negative and Friday declined more sharply. So that is showing that the industry is weak. If we want to see longer term industry rotation for this industry, I clicked one button and came here, and just the magenta color is instantly showing that it is relatively weak for a long time. And on Friday also it is relatively weak. So the industry allows us to short. Let's check the fundamentals. I came back to Q Vital using integration buttons. Overvalued stock. The industry as a whole was weak on Friday. We saw that before also. 75% of the 8 PR stocks of Diageo, ticker symbol DEO, 75% of PR stocks came down on Friday, and earnings growth is also negative. Over 1 year period, revenue growth is also negative over 1 year, 2 year, 3 year periods. So fundamentals allow us to short it. Technicals had a breakout setup. Let's look that up in Q Finder. I clicked a button to look up in Q Finder. It has a breakout setup on Friday with bearish pressure. In fact, on Q Global, it has a bearish headwind and possible box setup. Let's look it up on Q Global now. Positioning my cursor here, clicking the chart icon. It's opening using daily chart. I'm going to use the menu bar to look at it using weekly daily. Let's remove the relative performance line. It is clearly underperforming at the right edge. This copper color line coming down at the right edge, it is underperforming the market. Let me clear that to have a better view at the charts. What are the signals? We see now there is a bearish headwind signal, bearish pressure, bear release, red traffic light coming down below trendline support, reversing from watermark resistance. Enough bearish signals in the daily chart. In the weekly, we saw earlier also bearish shape candle with long upper tail with indecision at the top signal. And if you are into channels, it is at the upper end of the very long term channel, right at the very upper edge. We saw there is a possibility if I change the weekly to monthly, it may create a false downside breakout. So looking at these signals, bearish headwind, breakout, red traffic light, reversal from watermark, bearish pressure, bearish release at the upper channel, indecision at the top, indecision candle, I think there is a low risk shorting opportunity. Industry is weak, fundamental is weak. Why don't we? See, I am at Q Finder now. I may click this button to check its seasonality. Data is retrieved. Let me go to the seasonality detail. We are in the month of May. It has just started. So this month, this is today. In fact, I noticed today is a very unique day because month has changed, but the candle doesn't have any data for this month. So this month's percentage change is 0. Is there any bullish or bearish seasonality? Not significant. If at all, we have to say it is bearish because it is up only 45% of time. Average gain is very small, 0.3%. Average when up 4.3, average when down -3. The years when drop was more than average when down are these bold italics: -3.2, -5.7, -10.1, and -3.8. Those were in 2002, 2010, 12, and 13. Slightly bearish, but we cannot say it's not really bearish, not bullish, not bearish. Unless it goes to 80%, around 80% or so, we cannot rely on seasonality. It's right in the middle. There is, I read the numbers, but when the seasonality percentage is only 45%, it's neither here nor there. Don't have any information from seasonality. If I go back to Q Vital, the fundamentals were weak, industry was weak, and the chart was looking weak from many angles. That is how in this market you may look for weak stocks, weak industry, weak fundamental, weak technical, which give low risk shorting opportunity. The stop would be just above Thursday's candle, not a very high or wide stop, and you may try to book profit at the next trendline support. You may look for similar setups by combining insights from Finder, Vital, Edge. You may try to align seasonality also if you could. We are at the 1 hour point. Let me end today's session here. The market is at a very high level and it is showing several indecision and overbought indications across the board. Very indecision indeed. Overbought from market breadth, including the newly added 3-month new high, new low T21, T21, 21 studies. And we see bearishness only from Q Finder. And when I saw that, I looked at possible shorting opportunities. As you can see, DEO could be one such opportunity. You may investigate further. I would probably avoid buying new stocks now. That's all for today. I look forward to seeing you in our next session, which will be most likely on Wednesday, 8 a.m. Eastern Standard Time. I will announce it on Twitter, and if you are following me on YouTube channel that is Trading Profitably, then you will get notification. You may follow me on Twitter also. Usually I share all the webcasts on Twitter as well. That's all for today. Keep safe and trade profitably. Thank you.